Good morning, traders. Jefferson Fawcett here with Walsh Trading. Happy Monday, everyone. It is Monday, October 6th. It's a couple ticks here after 7:45 here in the morning. Let's take a look here and see what the markets did here on Friday, what happened in the overnight sessions last night, what may happen here today. Please keep in mind futures trading does involve substantial amounts of risk, certainly not suitable for all investors, traders, or producers. So starting off as I normally do here, this is December. Live cattle was up $1.02 here on Friday. 234.50 is where that finished, bouncing just off that 50-day moving average here. Again, that's 1, 2, 3, 4 out of the last 6 trading sessions. We bounced off of that level. Have not yet been able to get up above or at least close through that 10-day moving average. That's a 235.54, giving you some resistance there. Market's kind of been sideways here really since the early first week in August here. So you've had 2 months of really, in my opinion, perhaps not a whole lot of trend to it. I mean, we're really at the same price we were here August 7th. 50-day moving average does need to hold as support here. We are very close to trend line support here as well in December live cattle. That trend line number here today, I've got that right around that 232.50 or so mark. Looking at November feeders here, an up day on Friday here, up 302. Short-term averages 5 and the 10-day hooked over to the sell side here with Thursday's trade. There is a small gap there for it to, up to 357.02 that they left from Wednesday afternoon to Thursday morning. May want to get up and try to go fill that here. Unlike fat cattle, feeders are kind of trading mid-range here. At least reference the highs that we've had, that trend line that I've got across the highs here that we had here in August and September here, connecting the lows that we had, or roughly the lows that we had here in August also and September, kind of working itself into a narrowing range, but we're right here in the middle of it. 50-day moving average giving you support here down around 349.10. I think that free 350 big fat round even number is going to be pretty big here for the November feeder cattle contract. Normally the live cattle trending higher this time of year. Normally feeders are trading lower. And both of those are kind of trading sideways here at the moment. Lean hogs had a nice little bounce up here on Friday, gaining 62.5 on the day, closing 87.30, bounced off 50-day moving average support here on Thursday. Now the short-term averages 5-10-day, they are on the sell side, and on the weekly chart here in lean hogs, they also put up a big bearish engulfment here on the weekly chart. That's not necessarily friendly. The short-term moving average is turning over to the sell side and also not necessarily friendly, but I do like the fact that we bounced off 50-day moving average support here on Thursday. If they really wanted to push the market down, they absolutely could have. Not a real big up day on Friday, but I don't know. I'd take a speculative shot at the long side here in this market. Stochastics pointing towards some higher prices. Volume on Friday was a little bit light compared to where it was here earlier in the week. December corn here. Now keep in mind the government's closed. There's no commitment of data or commitment of traders data. There's no government reports. So the WASDE that was scheduled to come out here on Thursday at this point in time is not happening. Crop progress, export inspections, all those reports that would come out normally on a Monday also not happening. So charts become kind of the main driver here of prices here. We've kind of stuck between the 100-day, that's that white line here on my chart, 423 3/4, and the 50-day moving average giving you support here, 414.5. Friday we closed 2 3/4 lower. D scored at 419. This morning we're 418 3/4, a whole tick lower here at the moment. Not a whole lot of momentum. You do have lower lows, lower highs here in the overnight session. And Friday they got awful close to bumping into that 100-day average and failed, closing actually right off the 10 or the 5-day moving average, closed below the 10-day here as well. Momentum seems to be with the bears right now, although not a whole lot behind it at the moment. Stochastics are sideways in the MACD, pointing lower here, but it's kind of turning into pink, which is more neutral than anything else. Until corn breaks out as 414, half 420, we'll call that 10-cent range here between 414, 424. Don't see too much direction to it here. November soybeans 10.20 this morning. They're up a couple cents here. Friday we were down about 5 3/4. Market rallied up, hit that 100-day average, hit the 200, hit the 50-day moving average here on Friday, and failed because of that. Short-term averages did turn to the buy side here with Friday's trades. Stochastics are pointing up. Not sure if that failure here on Friday was just technical selling pressure against those moving averages. Those were significant support here early September. Now they become a little bit of resistance. That's between 1024 and a half on where the 50-day is, the 1028 3/4 where you've got the 100-day. Short-term averages are on the buy side, so maybe soybeans can bounce up a little bit. They typically tend to have a mild little uptrend here until November contract expiration. Soymeal on Friday finished the day down just 7 ticks here, closing 278.60. This morning we're 278.70, up a whole tick. Short-term averages, I had a signal here on Friday that I mentioned. By the way the market traded and closed throughout the day, that signal gets moved here to today. Got negated here, just didn't appear for the rest of the day on Friday. Short-term averages in soymeal trying to hook again to the buy side here. Market's trying to find some support. Had a good day up last Thursday. Profit taking as people kind of bailed out and position squared on Friday. Short-term averages pointing toward the upside as our stochastics and the MACD is starting to hook up in soymeal as well. Soymeal's got a nice little seasonal tendency to bounce higher this time of year. So does soybean oil. Up 27 here overnight, 50.32 is where we finished. Down 39 here on Friday, but the short-term averages did flip over toward bullish territory. We'll see if they can maintain that. Stochastics pointing toward higher prices. MACD is barely pointing toward higher prices, but giving you a little bit of positivity from the technicals there. Bean oil really has been sideways here for the last 2 weeks. We have not been able to successfully really break out of that range we had here Monday, September 22nd. Let's see if they can do that here this week. Resistance there is about 50.75. Support there is 49.50 or so. So 50.75 down to 49.5. Got to see bean oil break out of that trading range. Chicago wheat's up 2 cents here this morning, 5.17 working on its 4th green day or 4th up day here in a row. Just above 10-day moving average. That was resistance. That's at 5.17. We're a whole tick above that 5.17 market's been trending its way down. Obviously, we're well below the 50-day moving average, giving us resistance here up around that 5.26 3/4 mark. Stochastics are pointing higher. The MACD is starting to turn a little bit green here down here at the bottom. Not wildly bullish here on wheat just yet, but then I think it's got a little bit of work to do before it turns the trend, but they're working on it. KC wheat's up 2 cents here this morning, not nearly as friendly as the Chicago chart looks here. Been more sideways than anything else the last 4 days. We're right at 5-day moving average. That's at that is at 497 and 5/8. We're at 499 here this morning, just above that support. Stochastics pointing higher. MACD is trying to hook up a little bit, just wheat market's having a real tough time rallying here. The only other market that I've got a new trade signal in here this morning is the 30-year bonds here. They're down 9. Those flip to the buy side here with Friday's trade. Back down to 50-day moving average support. 2 big bearish days here in a row here might negate this trade signal here. What the market might be thinking is the Fed meeting here at the end of the month may not happen. I'm not sure how the FOMC works when the government is shut down. I'll have to do a little bit of homework on that, but bearish activity in the last couple of days suggests that maybe the market does not expect that there's an imminent interest rate cut coming here at the end of the month. Big movers here for the day. Nasdaq's up 205, pushing up to new contract highs here. Gold market remains strong, $52.70 higher here at the moment, 39.61 new contract highs all around there. Gold market looks very strong here as well. So does silver here, in my opinion. It's up 20 cents at a new contract high here this morning, backing off those highs a little bit here at the moment. But overall, that market looks very, very strong. And the lagging metal here, copper's down a little bit here this morning, 6-7 cents lower here, trading right around that 504 area. Do like all the metals here, copper, gold, silver, from the long side here at the moment. I appreciate you folks listening. We'll talk to you tomorrow.